Thanks, Sam. This is Dave Dickinson. And first off, let me take you to the table of contents in your packet. And again, hopefully you've had a chance to print that out. What I want to talk about is what we're going to talk about today. We are going to look at the table of contents here, and you're going to see there's some current events. In fact, just earlier this week, Congress passed, the President signed some new legislation, and that was after we had submitted our packet to Bankers Online. So I'm going to ask you to grab a notepad and pen, and we're going to give you some highlights of what that's all about. But we're going to talk about the big picture of flood insurance, the purpose, and then get into the requirements of the flood determination form, when you have to play by these rules, the tripwires and things like that. We'll get into the notice requirements, and there's a lot of civil liability that goes along with that as well, not just a regulatory side. And then probably the big meat after all the current events is this amount of coverage. The insurable value is the very, very hot topic that is still somewhat gray. What we're not going to cover today, and that will be discussed in Part 2, has to do with condominiums. We'll get into lots of mathematical examples, multiple buildings, detached garages, all those types of things. And it's not that you can't submit those questions, but don't be offended if we say we're going to cover that in Part 2. There won't be any overlap between Part 1 and Part 2. This really is 4 hours of training, and so we encourage you to not only attend the day, obviously you are, but to attend the session that is the other second 2-hour session as well. Now, at the end of your packet there, following page 25, there is some Q&As from a webinar that we've previously done about a year ago for Bankers Online. And I just think it's always kind of nice to have Q&As. It's a great way to read through other people's questions, maybe trigger further questions that you might have. So we wanted to include those for your benefit. But let's get into page 1. And one thing I need to tell you, too, is anything you see in italices in our packet here, we're taking that directly right from the FDIC rules and regs. In fact, let me talk about that. There really is no regulation for flood insurance. We have a law, an act, the National Flood Insurance Act. It establishes the National Flood Insurance Program, and it was given to FEMA to write interpretative rules, and they really didn't. They came out with the FFIC, I should say, has wrote some Q&As. There is a guidelines book that is put out by FEMA, but that's certainly all they are is guidelines. So there's a problem here in that your insurance agents have their manual, your regulators have an interpretation, and sometimes we run into different interpretations by the different regulatory agencies. Maybe the new CFPB is going to have some things, but they really don't have the authority to write the interpretative rules, like if we were talking about the Truth in Lending Act in Reg Z, or other regs where a regulatory agency like HUD or CFPB or FDIC, et cetera, has the rights to say this is the rule. So you lenders sometimes will ask your regulator, and they'll say, well, you need to call FEMA. And so you get a hold of FEMA, good luck, but you get a hold of them, and they say, well, you're a lender, you're a banker, so you need to contact your regulatory agency and see how they're interpreting that. And that's really what I'm talking about here with this first slide, letter A, the regulatory environment. There's a lot of finger-pointing that goes on, and it's tough to nail down answers to some of these questions. And there's a lot of ambiguity because what Jerod and I will refer to as there's a insurance industry standard, and then you've got your regulatory or examination standard, and sometimes they don't jive. And we'll point those out as we go along where some of those pitfalls might be. Let me get to letter B on page 1 of your outline. This is the brand spanking new. July 6th, President Obama signed a 5-year reauthorization of the National Flood Insurance Program. Now, it came out late Friday, didn't even see anything until Monday morning, actually, and we've had a couple days to try to read through little bits and pieces of it. But let me hit some highlights for you, and I guess, Sam, we're probably going to end up doing another webinar because there's lots to talk about here and not enough time in this one. So watch the Bankers Online briefings and emails and things like that. Jerod and I will probably try to have another webinar down the road. One of the things it does, again, is this 5-year reauthorization in which I clap my hands and say yay, because we kept getting these 60-day extensions and 30-day extensions. And so finally we've got 5 years added to the National Flood Insurance Program. It's part of the transportation bill, and I don't know why it's in that, but that's where they stuck it. It gives, it basically says, hey, NFIP, the National Flood Insurance Program, you owe us $18 billion, that's with a B, and you've got to get that money collected somehow. And so there's going to be raised premiums on the borrowers that are buying flood insurance and, the people that pay voluntarily for the flood insurance. It's going to phase out over a 4-year time period subsidies that are given on a lot of the homes especially. So second home, businesses, repetitive loss properties, those types of things are going to see about a 25% increase each year for the next 4 years and try to phase out those subsidies. And so flood insurance is about to get much more expensive unless it's a primary residence. Another interesting thing is that flood insurance has to be paid for right now on an annual basis. You can't do installments. They're going to allow installments payments. Now, here's sad news, lenders. It's going to increase civil penalties. Today, the law says $350. It goes up with the Consumer Price Index. Quite honestly, I don't know where it's at. $400 roughly per violation if you get caught not doing flood insurance correctly. That's going to go to about $2,000 per violation, and there used to be a cap on that. It is now no cap. So we see civil money penalties sometimes up to, Jerod, what do you suppose some of the highest ones we've seen, 80,000?
90 to 100.
Yeah, some of the highest ones.
Highest ones.
Those are going to get a lot bigger. We have seen a couple that were, $215,000 back about 4 or 5 years ago. They hit the cap. Those caps have been removed. So basically Congress is saying, hey, regulators, you need to slap the bankers, and bankers, you need to hold borrowers accountable and make sure that if they have buildings in these high-risk areas that they're paying in, you are the gatekeeper. And so lenders that are listening, I ask you to raise your right hand. You've all been deputized is what this thing is basically saying. Now, I can argue I don't like that. I don't think it's right, but that's what it is. It's very similar to Bank Secrecy Act in that you have been deputized. And I have a big, long speech that's boring how I think that's wrong. Another interesting thing is we already today, if you're escrowing for taxes and insurance, you'd have to escrow for flood if they're in a special flood hazard area. There's a new section of this law that says you will escrow for flood insurance payments, and I don't read if you're already escrowing. Yet, what about the banks that don't escrow? I'm not sure on how that's going to work. I haven't, again, had time to read through all of this thing, but it's going to require escrow of flood insurance payments. But that's 2 years away is what this law says. Another interesting thing is there's some appeals types. Lots and lots of sections have to do with appealing. So if somebody says, I don't think this map is right, how that's handled, and there'll be independent boards that will take care of that for flood map disputes. Now, if you were listening live today, earlier this week came the new CFPB RESPA Truth in Lending merger that we saw. There's a notification requirement under this new law that says when you're doing a RESPA loan and they're in a special flood hazard area, you're going to have to tell them that flood insurance is available under RESPA, not just the notice that we're going to talk about here in the next hour, hour and a half, but some kind of RESPA notice. And it sounds like that might work its way into the settlement cost booklet, which, if you know anything about that, that's only for purchase loans, so I'm not sure how they're going to handle that one. They really crossed over into another regulation. It clarifies that private flood insurance does meet the flood insurance purchase requirements, and that's something that actually FEMA wrote a memo 2 or 3 months ago that said, what we've got in our guidelines isn't really quite right, and the private flood insurance can be accepted. So, and then the last thing I want to mention is that there's going to be a formula that they're going to come up with that tries to figure out what is flood and what is wind damage. And this was the big holdup on this whole thing was, what's a hurricane? Is it a flood or is it wind damage? And they're trying to, get away from the homeowners insurance like State Farm, American Family, et cetera, that are saying, hey, that wasn't wind, that was flood. And then the NFIP comes back and says, no, that wasn't flood, that was wind, and there's a lot of finger pointing going on. So they're going to have this formula that tries to figure it out and puts the cost on